Hey guys, I hope you're well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Strategist with TradeCaptain.com. Fortunately, we had some technical issues today, so the live broadcast I did unfortunately was shut down because of software issues on my end. So I'm doing this video recording instead. So we're going to do in the next 600 seconds is to provide you guys with a quick overview of the main markets as we usually do around this time of the day, and so you're ready and know what's going on in the markets and which levels that traders are watching. Now before we start, I need to stress that trading financial markets unfortunately is risky, and there's a general risk that we'll lose our invested money, and the primary reason for that is because we trade with leverage, which just magnifies potential gains and returns. The other thing as well is that the average retail trader just loves to trade against the trend, and that's a quick way to lose your money actually. So let's begin. As well, yes, before I forget, so you know the big drop in the euro over the last few weeks? Well, that's something that we talked about and discussed in my special webinar last month, my top trade ideas for March. And you know that big move we've seen as well in crude oil prices today? That as well was part of my top trade ideas for March. Now we're going to do a follow-up to that webinar, and even if you can't join me live, if you sign up, you're on the list, on my GoToMeeting list. I'm going to be able to send you the recording for it. So if you want to know what I'm trading, and don't forget to register for that. The actual webinar is taking place tomorrow at 10 a.m. On the 10th of May at 1800 hours London time. Okay, let's begin. And yes, let's begin with crude oil. So crude oil here, as you know, the market had a nice little breakout a few days ago. We took out this high here, and I was bullish already from the levels down here, but I said if we take out this level, most likely we're going to head to the next resistance level, which is the November 14th low from 2014. And I also said if you're not long on the breakout, and I was not long on the breakout, then I said if we move back down to pretty much the breakout level, first fib or so, then I think traders are probably going to look to go long. And surely the market moved down. In fact, it spiked all the way down to 67, 61. But we did not take out my trend defining level at the time. And the news for this was information that Trump would stick to the nuclear deal with Iran, and that caused the market to tumble just because geopolitical tensions lessened on the back of that. Now, I was looking at this, and I was just looking at it from a primarily technical point of view. Now, I could read the news, of course, and I did read the news. Still, though, I bought at 68.20, so I have a position from 68.20, according to what I shared with you guys yesterday, with initial stop loss down here. Now, about 2 hours later, we had more news, and in fact, Donald Trump was actually looking to introduce more sanctions to because he doesn't like the deal that Obama did with the Iranians, and that caused the market to rise again because of the potential geopolitical issues and the fact that Iran is one of the biggest oil producers in the world. And right now it's going really well, of course. I'm still targeting the 73.25 level, and what I did now is I reduced my stop loss to the low, and we can just take a new fib from the new current high to the new low like that. And I think if we move down, maybe down to the breakout level, a 50% correction to 63.39, then I do think we'll have another wave of buying if we would move down to these levels, and then I suspect this market is gonna head to the upside. Now this is the euro versus the USD, and if you're trading with the big picture the way I am, and that's really my preferred setups, that's how I made my returns since 2014. And then you're looking at the 120 level. That's sort of the big level. The market here is really stretched, really oversold, and I don't really want to be selling down here. So I'm still looking for that corrective move, maybe up to 119, and then I suspect you're just going to look to sell here. Now there are alternatives, and this is something that you can probably work with for as long as it's possible. It's impossible to say when it's not going to work, but it's scalping. So it is possible to scalp. Say for example you trade with a 30-minute chart. Well, if you look at the 30-minute, we had a breakout here at 6:30 or 7:30, nah, 6, yeah, what is it? 7 a.m. London time. And usually when the market breaks the downside like this, it continues to drift to the downside. So there are people that sold here, and there are people that are selling right now at these levels, but they're scalping. So what they're doing is that they're ignoring the big picture, and they're just hoping for this momentum that they're seeing now in the early morning to carry on for a few hours. And over the last few days, scalping has been a good idea. Here, for example, is a break at 9 a.m. The market traded to the downside and continued to go to the lower. And maybe it's going to work out today again. I'm not really sure. But if you're into scalping, then being bearish from current levels with a stop just above, so you risk about 28 pip for a potential test of the low. That's 19 pip return, but I think eventually we can head down to maybe 118. So you look to make about 41 pip by risking 30, which is not a bad deal. But scalping, of course, is not for everyone. Now, this is Bitcoin, and Bitcoin is bullish. As you might remember, already in March I said traders are probably going to look to buy here. In fact, they turned bullish already on the break here. And I said, as long as you trade above this low down here, I want to be bullish. The market moved to our advantage, and now it's back at support. And right now, it is trying to bottom out, so there's no real reason to change our bias. But we're seeing signs that not everything is well. You have Ripple, you have I think it's NEM, and you have Monero, and you have Dash. There are those four out of sort of top 10, top 11 coins are bearish. And then you have Ethereum Classic, Bitcoin, and ADA, and they're all under pressure and very close to breaking their support levels. So if we take out 8,772, I think this market can continue to move to the downside. But until that happens, let's not worry about that, and let's just stick with the trend. Here's gold. Gold is really interesting, and I did a special update on that yesterday in the technical analysis section. In fact, if you love this sort of setup, so you love this webinar, check out Nathan's ideas and as well my ideas and yours ideas that we publish here. So already yesterday I said that the market is trending sideways between the May low and the May high. Check out the low, and the next major low is down here, which is the October 2017 low. So if we take out this level, the market could potentially move to the downside, and we're looking here at potential risk of $17.50, and we could potentially make up a potential reward of 38. So bring out the calculator. 38 divided by 17.66, that's 2.1 times our risk. Very good idea, something I like, something I want to work with if we slide below support. And euro is free fall, pound dollar as well in free fall. So most likely, I suspect, if we take out the May low, this as well are going to continue to trade to the downside. Finally, here is the DAX 30, and we took out the high here a few days ago. I said we're probably going to head to the upside, which we did. We're at resistance. This is not the time to buy. If you're looking to scalp or even buy here, you need a pullback down to support. If I show you the 1 hour, you can see what I'm talking about. And I like this level down here. I don't want to be buying up at these levels right now. This is a level to book profits, especially if one bought down here as we looked at a few weeks ago, or bought on the breakout. Now I think this is going to head to the upside for a few more days, but again, options we have right now is book a profit, wait for a pullback, or keep the position for longer and see how much more we can get from this market. And that concludes today's market update. If you like this presentation, don't forget to click on it and subscribe to us on YouTube, and as well to like the video. That's really important if you like it and want to support us. If you don't like it, then it's fine. we can see that in the figures, and we'll use the figures. So we'll look at people that actually watch the presentation and the number of likes to sort of know what we should be doing and not doing. Awesome. Have a good day. Let me know if you have any questions. Thank you.